Want to cut your tax prep bill in half and avoid paying your accountant to dig through a mess of receipts? You're not alone. Keeping clean, simple accounting records isn't just about looking professional and impressing your CPA. It can literally save you thousands of dollars per year. Let's break down exactly how. I'm Sean. I've been a CPA for 13 years, and now I help small business owners like you make sense of their numbers without needing an accounting degree. If you like my content and simply need more, subscribe to my weekly newsletter at ledgerready.work. Every new subscriber gets a free download of my budgeting workbook that I hope will make your annual budgeting process stress-free. Today, we're talking about something that might sound boring, but could save you real money in real stress. Keeping your accounting records clean and organized. I know it sounds super boring when I say it out loud, but it may not be sexy now, but when you're saving money around tax time, not having to pay your CPA for all kinds of bookkeeping cleanup, you'll be pretty psyched. If you've ever handed a pile of bank statements and receipts to your accountant and watched their eyes widen, or gotten hit with a surprise bill for additional work, this is for you. Let's start with the obvious. Accountants charge for time. They charge by the hour for their work, and it's not pretty. If your books are messy, incomplete, inconsistent, your tax preparer has to do a whole slew of things to get it organized so that they can prepare your tax return. That could include rebuilding missing data, reconciling your accounts manually, chasing down explanations and missing documents, which could actually result in you spending more time around the worst time of year to be doing it. And they may have to interpret vague transactions like Venmo or Amazon or Amex, however it may be worded in your records. This extra work does not just delay your tax return, and I'm sure many of you have been there and gotten the letter or the message from your tax accountant that they're not going to be filing your return until October because they had to file for an extension. This all adds hours to the job. And at $150 or potentially more, I've seen as much as $300 or $400+ an hour, this extra time adds up very fast. Here's an example. One business I worked with had 6 months of unreconciled bank statements. It took the CPA an extra 8 hours just to clean it up. So at $400 an hour, so go to the ceiling, 8 hours times $400 an hour, that's $3,200. Even at half that rate, it's still $1,600 in extra billing just to do what would have probably taken you or your bookkeeper 1 or 2 hours a month if you had done it during the year to maintain orderly bookkeeping. So when people ask, is it worth spending a few hours a month to stay on top of your records? The answer is obvious. It absolutely is. Because the alternative is paying someone else way more money than potentially what your incremental tax bill would be to untangle it later. So let's talk about what organized accounting means. What does it mean to have clean books and records? It's not about perfection, as many people may think that it is. You don't have to be a CPA. You don't need extensive training hours and experience in bookkeeping. It is about consistency and clarity, having a clear idea of how you want your books and records to look and doing it consistently. So here's what I think you should be doing monthly. Record all income and expenses properly. I know it sounds obvious, but use your software that you're paying for. Don't do it in Excel. Don't try to do it by hand with pencil and paper. Just bite the bullet, pay for a subscription to QuickBooks, and get everything in there timely. I recommend spending an hour or two each week, making sure that your income is in there, all your receipts, and also recording your expenses, so that the bills from your vendors, get them in there, and even maybe pay it with a future date, for when you plan on paying it. Get the bill ready to mail, or however you're going to pay it, or schedule the electronic payment, and just get it ready to go, so you're done and you don't forget later on to do that. When you're entering your expenses, make sure you categorize them in an accurate and orderly way. Don't just say miscellaneous or other. I like to describe what it was for. And if you set up your chart of accounts in a nice, clean, organized way, you can make sure you're getting it into the right general ledger account in your accounting system, which also just makes your tax accountant's life a lot easier. Make sure you separate business and personal accounts. This is non-negotiable. Do not pay personal expenses through a business account or business credit card. You will be shooting yourself in the foot. You'll have to go through your credit card statement line by line to figure out what was personal versus business, and it makes the accounting much more complex. There are certain things you can deduct, which I've talked about in a past video of mine, and there are things you cannot deduct. You cannot deduct as business expenses personal items. So your tax accountant is just having to spend extra time figuring out what those items are, and they will have to ask you in a lot of cases too, most likely, which just adds more time to the process for you. Reconcile your bank accounts. This is huge. This is not just to get your records nice and clean for your accountant, but also for yourself to know that your accounting records are complete and accurate. In other words, everything is recorded that should be, and at the right amount, and is categorized properly. So this is very simple to do. If you do it monthly, it honestly with QuickBooks will probably take you 15 minutes. The first time maybe a bit longer, but once you've learned it and you get in the habit of doing it, it's extremely easy, very fast. Keep digital copies of receipts and invoices. This is huge. Lots of people think you need to keep a hard copy of receipts and invoices. The IRS does not need hard copies of all of your records. They accept digital copies of everything as long as it is legible. So what I recommend doing is get rid of all this physical paper. Shred the stuff that is sensitive. But before you do that, so when you get a physical copy of a receipt, take a picture with your phone. A lot of smartphones nowadays have a scan function that you can just scan it right from your phone. Title the document something meaningful. Like I like to do the vendor name, the date, and maybe some other descriptor like utilities or rent or something like that, so it's easy to access, and then file it away in a folder labeled by month. So if you need to go back by month and dig something up, you know exactly where to go. If you pay a lot of bills, you might even add individual folders within those monthly folders that have the title of the vendor or type of expense. That way, when you get to tax time at the end of the year, you can just do a zip folder, just zip up the whole folder of receipts and documents and send it to your tax accountant. In most cases, they won't even need that. If your books and records are clean and orderly, they most likely will just need a few reports from your QuickBooks or whatever software you're using. But if they do request a receipt or invoice, you won't have to go digging for it, nor will they. Don't use a shoebox. Label unusual transactions. So like I said, if you're, as long as you're tracking invoices and expenses and labeling them in an orderly way, this shouldn't be a problem. But if something comes up that is unusual and you're not sure how to handle it or what your tax accountant will think, make sure you have a folder or some other separate filing system that is keeping track of these unusual items so that you can bring it up to them later and make you're not making a bigger deal out of something that isn't that big of a deal. Track your owner draws and contributions. So in QuickBooks, what I would do is set up an account. You can call it owner's equity or owner's contribution or owner's account, something like that. And anytime you distribute money to yourself, so if you pay yourself a salary through your business, but you also occasionally make withdrawals from the bank account for other things, that is what would be called a owner's draw. Or if you pay something on behalf of the business from your personal account and you're not reimbursing yourself, that is a owner's contribution to your business. These are not expenses or income of the business. So if you contribute to the business, that's not business income. If you take a draw from the business, that is not expense. You pay tax on the net income of your business. You do not pay tax simply because you withdrew money from the business. And so it's important to make sure that those are clearly labeled so you don't so your tax accountant doesn't make a mistake on your return. All right, so if you follow just these steps, you'll make your accountant's life easier, but more importantly, you'll make your life easier and spend a lot less money at the end of the year on tax prep. Now, here's the bonus that most business owners overlook. Clean records don't just save you money on tax prep. They also help you avoid overpaying taxes. If your expenses are miscategorized or missed altogether, you may be paying money on a higher taxable income than you should. You may catch errors or fraud, especially from doing a monthly bank account reconciliation. If you have a bookkeeper that's paying themselves under the table, that would catch that. You might qualify for loans and credit where you otherwise wouldn't with unclean books and records. Creditors look to see clean financials because they want something they can rely upon when they're making a credit decision. So if they get your books and records and they look extremely messy and don't make any sense, they might not view you as being as worthy of credit as you otherwise would look. They may deny you altogether or give you a higher rate or just worse terms otherwise. Keeping orderly books and records, the last item, helps you to plan and grow your business. Clean records give you visibility into your profit, your cash flow, and your business trends overall so you can make smarter decisions in advance. In short, messy records cost you in ways far beyond just your accountant's bill. All right, let's put some money on this. If your accountant charges $200 an hour and your disorganized records add just 5 extra hours of cleanup, which is hardly anything, could easily be four times that amount of time, that is $1,000 straight out of your pocket just because you didn't spend a couple hours a month doing this. And like I said, that is the low end. Now compare that to spending 1 to 2 hours a month doing basic bookkeeping, or if you hire a bookkeeper that you pay part-time, they might have an hourly rate that's a fraction of what your CPA is getting. So if they could spend 4 times what your CPA would spend and still cost less money. And you'd get the bonus of not having to do all this extra work around tax time to get your records nice and clean and organized. So that's savings of thousands of dollars per year in probably hundreds of hours of your own time, to be honest, right around that tax time. So in short, you're avoiding the panic scramble every March when your CPA says, hey, I'm still waiting on your expense list. You save money. You avoid stress around April timeframe because you're all organized. There's nothing for you to do. You're all ready to go. And you can make smarter financial decisions. So don't wait until tax time to get your numbers in order. Start now. Build a monthly routine. Use software. Hire help if you need it. But don't leave it all until the end of the year. All right. I hope you found this helpful. Be sure to subscribe for weekly plain English accounting and finance tips that actually make sense. And if you're looking for more tips, check out my newsletter at ledgerready.work. And thanks for watching. I'll see you next time.